Okay, this is Jeff Scott, and it is December 8th, about 7:45 p.m., and welcome to this week's HGSI Doc Top-Down Review. As always, I'd like to take a quick look at the futures, get an idea of where things are. Let's just open up my browser real quick. And we can see the futures are up a tad, 2.5 points on the S&P 500, 20 points on the Dow, and 7.5 on the NASDAQ. So it's still early, and obviously plenty of time for the market to decide to go one way or the other. I entitled today, For Whom the Hindenburg Tolls, as the Hindenburg omen fired on multiple different models on Friday, and that will be my HGSI topic of the week. In addition, I saw some interesting things in how the market's rotating and the types of stocks that are leading. My email, as you can see, is jeffrey@highgrowthstockdoc.com, and let's go ahead and start. The disclaimer, as always, this is for educational purposes only. Any recommendations I make are in the spirit of education, not investment advice. I'm a doctor, not a broker, and most physicians lose money with their investments. And I am not affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading, and I have paid for all the tools that I demonstrate. So I'm going to break with my tradition here where I never sell anything, and I am selling something this time. I want to introduce you to a meeting that I've mentioned a couple of times that's now cemented. It is going to occur Saturday and Sunday, February 15th and 16th in New York City, where one of my good buddies and a great trader, George Lee, and I will be holding our first of hopefully an annual summit to occur the weekend before the Traders Expo occurs in New York City, so folks can take advantage of both opportunities. The topic is going to be all interactive, and we don't want it to be didactic. It's about high growth stocks, how to find them, and how to trade them. We'd expect those that attend to leave knowing how to identify great growth stocks, how to use HGSI or your favorite scanning program to find great setups, then use your trading tools in real time, whether it's Thinkorswim or TradeStation or others, to find triggers. We'll talk a lot about developing and implementing your own money management and risk strategies. And then, since both George and I are a fan of seasonality and Magenta Trader, we'll be talking about seasonality as well. At this point, I can confirm that George will be here, myself, and Chris White. The three of us were big participants in a recent meeting on the West Coast in Anaheim and another one in Vegas, and I thought we had pretty good reviews. And I'm looking at potential special guests. A lot depends on how many people are attending, which affects my budget and also affects the interest in people coming over. There is a cost to this meeting. It's $750, including breakfast each day, snacks and refreshments. If I can get 10 people to attend, then I'll have enough in the budget to bring in lunch as well. My goal is not to make money on this meeting, but rather to break even and create a huge value for the attendees. In addition, on Friday night, there will be a meet and greet reception. Still working out the details on that. It might be a wine and cheese party at my condo. And frankly, if we have 12 to 14 people commit, then I will just take everybody out to a nice dining room with a private room, and George and I will do some presenting during a good dinner. First 10 attendees, we've got 2 already, will receive my customized indicator set for TradeStation. I talk about it a lot. I've never sold it. It includes many of the indicators, and I'll show you as we go forward. All attendees will receive code for indicators in Thinkorswim for scanning and charting, and more importantly, George and I will show you and get down to the individual level if necessary how to create these into Thinkorswim. Probably don't want to have many more than 15 people. I like this to be as interactive as we can, although I will evaluate how many people I'll let in. Certainly it's on a first-come basis, and there's my contact again, Jeffrey@highgrowthstockdoc.com. Promise you this will be a great meeting. George is great, and I think that Chris and I are great compliments to him. As I always go through these meetings, I like to start with this chart, especially for new folks to my sessions, and that, I'm just a regular Joe. I'm a physician. I made my comment about what physicians typically do in the market, which is lose money. And I've developed my style. I'm pretty successful, if I say so myself, on the trading side. But it's important to recognize that I learned a long time ago from Ian Woodward, who's my favorite quote-unquote guru, that rather than to rely on others to be your gurus, the best thing that you can do as an individual is to become your own guru. So I spend a lot of time with Ian Woodward and Ron Brown of Woodward and Brown Investing. I've read all of Alexander Elder's books. Those are 3 of them that are available at Amazon. William O'Neill. Actually kind of excited because my son's decided to get interested. He's now reading How to Make Money in Stocks, which to me has got to be the first book you would want to read and one you want to refresh. Once you get a handle on O'Neill, then you want Morales and Katcher. I know they're working on their 3rd book. Phil's already got a 3rd book. He wrote a sell short book for O'Neill, which might be apropos at this time of year, but really takes a lot of the O'Neill methodology and adds steroids or whatever drug you want to say. Great books, great reads, and introduce you to things such as the pocket pivots and viable gap ups that I like to use. From Elder, it's the Force Index and the Impulse Indicator that I use. O'Neill, Canslim's about growth stocks and New America, and those are the types of stocks I like to trade. Bigelow is my candlestick expert that I like to follow. Pascal Willane and others are about looking at, we call it effective volume, but the volume of the big guys versus the little guys. Van Tharp, position sizing and money management. And Gronke, if you're watching this, and this is more than you're really interested in, all you want to do is figure out how to make 10% twice a year on your retirement funds with no growth. And you want to look up Ronald Gronke on the web, and he's got a sale going on his 2 books. They're easy reads. And it's about covered calls and naked puts to create monthly income in a low-risk environment. I purposely hide my desktop because I have lots of programs, most of which I don't use. If I was on a desert isle, besides high-speed internet, I need TradeStation or Thinkorswim. I use both of them. I need a great analysis tool, which HGSI is the best. EdgeRater is becoming an increasingly more valuable tool to me beyond just the market timing, now looking for signals in specific stocks. Seasonal analysis, we'll probably look at Magenta Trader tonight, which is my favorite of the genre. And then I use MarketSmith fairly frequently because I do like the extended period of time of fundamentals and some of their scanning. So I did this last couple weeks ago, and I want to point out that the 4th quarter traditionally, seasonally is strong, and you could see that here. And if you look on these charts, you can see that December up 1.9 on the S&P, 1.8 on the Dow, and 2.5 on the NASDAQ is, if not the strongest month of the year, certainly it is in the NASDAQ, it's one of the strongest ones, and at least 60 to 70%, as much as 82% of the time in the S&P 500, it's up. So we are in a seasonally strong time, so if I have any bearish comments tonight, we need to take it into the context of a strong seasonality. So one of the things with EdgeRater, this is just fascinating. I have spreadsheets that go back, you pick the date or the weekend, I've got a spreadsheet of all the stocks in the universe. And I have the things that I care about, the EPS rank, relative strength rate, group rank, boxes, accumulation, distribution. And I could search, I could look at prices of stocks and things like that, or volume. But what I like to do is run this report in EdgeRater, and it gives me a sense of what's working now. So I ran this report. This was a spreadsheet built on the weekend around November 1st. And then based upon those fundamental ranking modules, EPS, relative strength group, AD rank, boxes, this is the performance since that time through close of the market on Friday. So first thing is low ERG stocks did very poorly with as much as 10% down, while the high ERG stocks were as much as 20% up there. So ERG is the combination of EPS rank plus relative strength rate plus group rank. Typically, except for the highest decile where you can only go down, high ERG stocks outperform. But even the highest ERG stocks were up between 5 and 10%. The winning stocks were up about, we had ERGs of about 280, and we're up 20% over the last 5 weeks. So if you made a lot of money, there's a reason for it. The market was very strong. Now the interesting thing is, if I look at EPS rank, relative strength rank, and group rank over this period of time, frankly, the only thing that matters was relative strength. So the stocks with the greatest relative strength, and this would not be the relative strength today looking back at the leaders over the last 6 weeks, but it was the highest relative strength stocks on November 1st are the ones that had the highest performance. So truly this is back testing, and it's proving that stocks with high relative strength outperform. Group rank didn't really make a difference. Obviously the higher ranks did better than the very weak ones, but really not a huge, there's no straight line as we see in the relative strength rank. And EPS rank, although having earnings was positive, it really wasn't a linear relationship to performance. Now, I saw this when we were in Vegas a couple weeks ago, and I scratched my head, but it's still the same thing, and that shows that those stocks who had the lowest group rank, think about IBD or HGSI, A, top 20% A, middle, second 20 B, middle 20 C, so on and so forth. The E-ranked stocks had the highest performance over the last 6 weeks. So is that a little bit of junk off the bottom? I don't know, but that's kind of interesting. And then not too surprising to me, and perhaps consistent with those last comments, were that box 7, which I talked about a couple weeks ago, is my favorite box, turnaround stocks, had the highest performance. And we expect 1s and 2s and 7s to outperform, and you could see here's the ones that did not have the box. So ERG matters. Right now, relative strength is the key driver. Group rank matters on a short time frame, but it really wasn't as important. EPS rank certainly less impactful. Looked like junk off the bottom rotation as best performance in the low A to E rank stocks. And as I said, HGS box 7 stocks were outperforming. A little bit about the Hindenburg omen. I don't take any credit for this. These slides are Ian Woodward's slides. He's the one that educated us on it. But frankly, this is something that's been in the literature for some time. And one of our friends, Myrna Fosbach, her husband Norman, has been one of the more important people in the Hindenburg omen as far as as sort of the professor of the Hindenburg. So it's a strong warning signal for a market top. And as I like to say, it's when the people like us are buying while the pros are selling. Claim to fame, there's never been a significant stock market decline in history that was not preceded by a confirmed Hindenburg omen. However, 75% of the signals are mainly small corrections. So we should not see one very often. Strong warning for a morning top. And there are a number of different definitions. They include that the daily number of NYSE new 52-week highs and new 52-week lows must both be greater than 2% of the total NYSE shares traded, so lots of new highs and new lows. That the smaller of these numbers is greater than 79. I've seen some people drop that. That the NYSE 10-week moving average is rising. That the McClellan oscillator is negative on the same day. And that the 52-week highs cannot be more than twice the 52-week lows. A confirmed Hindenburg omen occurs if a second or multiple occur during a 36-day period from the first signal. As you can see here, there have been a number of Hindenburg omens since the late 80s, and you can see that several of them, or about a quarter, 6 out of 23, had fairly substantial corrections, and several of them had just very small declines. In some of my charts, I can actually paint them, and this is the NYSE back in April, May of 2006, when you had a series of Hindenburg omens before an 11% drop. This was the first period drop in 07, July, a series of omens, and then a pretty substantial 14% drop. And then we had our second, so our big double top in 2007. This is going back October, November. And you can see it's far from an isolated signal. confirmed Hindenburg omen, and then the black swan event with the market's big correction in 2008. Reason why I take time and talk about the Hindi today is that using EdgeRater, where we can actually run this report in about 3 seconds on a daily basis, you can see, you probably can't see the dates, but this is going back to August. But we had our first Hindenburg omen fired. Now, I had heard other people's signal had fired, and I think a lot depends on definition, but there's 4 characteristics that have to be true for the Hindi to fire, and the last several days have had 3 of the 4 characteristics. So bottom line is we got a Hindi today, and if nothing else, it shoots a shot across the bow of the bulls. Now, other things that we do in HGSI community to look at the market condition is we make our own indices and then we track them. So back in October, we created an indice of market-leading stocks, and the hypothesis is that high growth stocks fall over much faster than the rest of the market, and that we might be able to pick up a market turn earlier when these stocks roll over. So we picked these in October, and you could see that over the last several weeks, they've bent and gone sideways, but they're still above the 50-day moving average. In fact, it looks like they're setting up for a squeeze, and will be interesting to see, do they break above and we run in to have a nice Santa Claus rally, or do they break down, in which case I'll be taking very defensive posture. Now, the other thing that we put together is something that Ian calls his canaries, the Googles, the Apples of the world, etc., Netflix. And these were the market leaders on the way up, and you could see the steep move up that they had from the middle of the summer up. They pulled back pretty hard, and they're coming back. They got below the 50, and very quickly they bounced back above the 17, and in fact they're trading at the top of the Bollinger Band. So I put this all together, and I'll have another slide about it, I think, next. Market thoughts, I'm bullish on seasonality. Clearly the economy is starting to improve. The indices continue their march upward. High relative strength is good. And, you know, neither the canaries nor the LLUR market timing list have broken. So if I want to be bullish, I think there's lots of reasons to be bullish. From a bearish perspective, you've got the Hindenburg omen, but I need confirmation. There hasn't been a major correction since this time, or last year, actually a month ago last year. Junk off the bottom is leading the last several weeks, so we sort of have correction in some of the leading stocks without the market. And obviously the improving economy equals the Fed will reduce taper soon. I'm sure you can add additional things in both columns. I think you can make an argument both ways. I want to be bullish. I believe we'll be bullish into the new year, but I am concerned, and the Hindi just makes me a little bit more concerned. Couple of other advertisements. Don't forget the next HGSI meeting is in late March, so people may be surprised that I'm doing a meeting 6 weeks before then. You know, clearly the HGSI meeting has a much higher preponderance of West Coast people, and my meeting is in New York. My meeting will be different, and I will be in HGSI meeting as well in March. I don't miss any of them unless I'm out of the country. If you haven't gotten the software that I'm going to use tonight, www.highgrowthstock.com, and we'll just take a quick look there. Just to point out a couple of key things. First thing is a free 30-day trial right here, where you can actually, without giving a credit card, you can sign up for the program. And once you sign up, it's important to make sure you go to the investment strategy, excuse me, the add-ons to add on the different things that I show you tonight, and there's instructions about what you need to add on. I'm still using the historical add-ons for reference, and I will start to add on the new ones soon, but I didn't want to change things until I got done with this webinar. The other thing is under investment strategies, I have my blog, which is mostly weekly video blog, and you're free to come there. There's no cost whether you have the software or not. You also have others on this blog, including Ron Brown, who talks more from a high level of the market, as well as interactions of HGSI, the market, HGSI and other programs like Thinkorswim. And then Ian has a wonderful blog. Let's see if he's updated it yet. Yeah, I bet he will before the weekend's over so we can talk about the Hindenburg. Sort of makes him famous because whenever the Hindi fires, everybody wants to know what Ian has to say. If you've not been to this before, I post these weekly. I have a YouTube site which you could look for under JAS Cancer Doc, and you can download this from multiple sites as well. Again, just to reiterate, February 15th and 16th in New York City, this will be an outstanding meeting. It will be very much a follow-up to what we did in Anaheim and Vegas. If you haven't heard George Lee work before or seen him work before, he is an outstanding trader. Neither of us consider ourselves day traders, although we have a lot of day traders that follow us. We both would be swing traders. I'd probably even like to see my swings turn into positions. I'm probably more adept at buying stocks with options as a secondary piece, and George is a little bit more primary options. Chris, not only can he talk about EdgeRater, but he'll show you how he's worked with George, and hopefully he'll work with me as well to build in the rest of the indicators that we like to use to automate the process. Again, Jeffrey at highgrowthstock.com. Again, attendance is limited, and hopefully we'll see you there. So before I go forward, be your own guru. Investing is a business. Make sure you have the right employees, and to me, tools and software. Continuing education matters, like meetings like I talked about. Trade the market we have, not the one that Jeffrey thinks you should have. So, 45 minutes to roll. Let's take a look at what we think is going on. Quick review from last week. I'll make this real short. That's not what I wanted. Sorry about that. So last week, the S&P 500 was down 2.16. My buy picks were up. We have a flat up. You know, so S&P didn't change much. My buy stocks didn't. Not a great week for growth stocks. IBD 50 down 0.63. HGS 100 down 0.85. This is a Friday to Friday, close to close. Wasn't a big difference if you looked at Monday. If you look overall, there's more reds than black. It tells you there was a negative tent to the market as well. Viable gap-ups had a strong week. M&K only had one that met our criteria, and it was Mimetics Group, and it was up 10.8%. So even in a soft market. I like this group here, high ERG, strong earnings per share, relative strength, and group rank. It was up 2.9%, which means it had to have a big winner in there. It had Puma Technologies, which was up 74%. So there were some groups that outperformed best stocks under $15. Retracing stocks, strong EPS near 52-week highs. So there were a lot of good performing stocks, but as a whole, our type of market was to the negative. I already looked at the Hindenburg, so I can skip that. Bucketology, looking at what percentage of stocks closed Friday above the midline of the Bollinger Bands, and I can see 64% tending to be bullish. And then I look at the distribution, that they're between 70 and 90%. Not a preponderance above or below, so not a whole lot of signals there. If I look within EdgeRater, these are all EdgeRater scans that really save me time. I can see that we had a lot of kahunas fire on Friday, which would be a bullish sign. You can see bullish, bullish. So this could be a powerful move there coming. You can see we went back to green on the percent B and start to see more green poking through on the percent B times bandwidth. So all of this to me looks on the bullish side. I mentioned the George Lee setups, and you know, one of the things I really love about EdgeRater is I could go into EdgeRater and try to get this out of my way, and I can go into find George in his little Canadian hat, look for daily signals, my list of tradable stocks, and then I go into sell templates and hit run. And then I take a drink of my coffee, you catch a breath. And momentarily, EdgeRater is going to take the 3,000 or 4,000 stocks that I just categorized between $2 and 150,000 in my universe, and this data is fed to it from HGSI, separate programs, separate owners, but work well together. I can see which stocks have a squeeze, and then I can look at Keltner channel breakouts, pocket pivot breakouts, MOBO breakouts, and pair box stop and reverse. And I had 3 stocks that triggered all of them, and EGY is one that I looked at over the weekend. This is an oil stock that had been hammered, and you could see it. You can't tell how much it's been hammered there. Let's go to a weekly, monthly. That's not going to work. You can see how it's pulled back quite a bit and looks like it wants to run. So the reason why I do this, and all kudos to George and Chris, is it just allows me to find what stocks are squeezing, which ones had a breakout. I do this end of day. I look at the charts, and I try and see if there are things there that I might want to be buying. If you don't have EdgeRater, you're missing out. It's really a critical component to what I do. If I go into TradeStation, you know I like to look at the elder indicators. I like to look at the major indices. That's log in. That's not a major indice. So let's go and take a look at, say, the S&P 500. So you can see it pull back Wednesday and Thursday, popped up, and frankly, I'm colorblind. Can't tell that's green or that's blue. My guess is it's green on Friday, blue on the weekly, blue on the monthly. You certainly can be buying this market. I continue to be concerned as this high here did not even break the midline of the MACD histogram. There's really was not a whole lot of pressure from the bulls pushing this up, and we continue to have MACD divergences, which, to be honest, we've had for quite some time, and the market's still going up. The NASDAQ, blue up at the top of its auto envelope, also with the MACD divergence. And the Dow, big reversal on Friday, pulled back 3 days in a row, turned green on Friday, blue on the weekly and the monthly, and it too had a MACD divergence. So, you know, this market may still run through the new year, but the amount of pressure continuing to push this market up is not that impressive. Now, I'm going to put a quick advertisement for my meeting. I've had a lot of people ask about these. They'll be customized to your machine ID. So if you look in TradeStation, for example, you go into About, and it'll tell you what your customer number here is, and I will customize them to your customer number, but this is what you'll get. You'll get my, kill this one, new pocket pivots, looking at pocket pivots up and pocket pivots down. You'll get my green candle lows and red candle highs. ISO failures, squeeze, MOBO breakdown in a squeeze, MOBO breakout in a squeeze, Bible gap ups. These will be a package of indicators, and I'll also throw in my high jump indicator, which scan for them, you can chart them, and you can put them into radar screens, and they'll be available at no cost to the first 10 people who come to the live, who's paid for the live meeting. For those of you who've been asking for them, here's a way to get them. And the live meeting is only a couple $100 more than what I probably would have charged for those indicators had I charged for them. Let's jump into HGSI and do my top-down review. So, you know, I like to go down to the Woodward and Brown user groups, and let's look at Major Markets Plus. Let's go to T1. And this will tell me what's been working over the last couple of weeks, where the strength has been. Dow, NASDAQ, utilities, composite. So big stocks there, small caps 600. Oil had a couple of good days last week. What's not worked, the dollar, gold, volatility, silver, treasuries. Small and mid caps perhaps underperforming the larger stocks, and we saw the strength on the TradeStation of the Dow Jones Industrial. 5-day performance, oil was up 4.8%, gasoline 1.5%. Silver down 2.5, gold down 1.8. And my major indices, NASDAQ was up 0.1, and we know that the S&P 500 was down, at least the way that we measured it, and Edge Rater was down just a teeny bit as well. Here it is. Here it was flat here. I guess it depends on weighting and things like that. So on Friday, one-day performance, Dow was up 1.3, NYSE was up 1.1, S&P 500 was up 1.1, the Russell was up 0.8. So pretty much strength across the board. Big guys a lot stronger than small guys. We take a quick look at some of these. Here's the Dow. So for newbies, I have way too much on my chart. I know that, but it works for me. I'm very visual, and I can flip through charts very quickly and get a sense of what's going on in the market. So we know that each of the markets, and I don't want to spend my whole day on this as I sometimes have done, has had a very nice run up. We had a correction last year, the deepest correction of the, or one of the deeper corrections between September and November, and the market ran up all the way to the summer with nary a correction. We had a series of 3 or 4% corrections here, and the market is going to end up the year, barring a major collapse, with a pretty good positive. Whether it's up for the month or not obviously remains to be seen. So the Dow was in the midst of a small pullback, got back above the 8-day exponential and the 50-day on Friday. Pink is a pocket pivot down, blue is a pocket pivot up. So Friday I had a kahuna, so big movement between the Bollinger Bands. I had a bullish reversal looking pattern here getting above the 8 and the 17. I had a DI crossover, and where my bongo still shows sort of a pullback, which uptrend on the longer, pulling back on the shorter. Both the four forces reverted to green. Pretty bullish looking chart, and you know, a little shallow compared to some of the prior pullbacks. It'd be interesting to see if we're off and running into the holiday. Take a look at the S&P 500, and again, similar things. Over the last month and a half, you've had little pullbacks to that 17, and it's jumped. Strong market, that's what strong markets do. Still looks very strong. There's no force because there's no volume. I go down to the Russell 2000. I see the same pattern reversing off of the 17-day moving average, which it did earlier. So it continues to run. It's not having as deep a pullback. Certainly, you could be bullish looking at all this. I'm just a little nervous with that Hindenburg, but that doesn't mean I'm getting out of the market. The VIX tried, as usual, to get above the 200 and failed and got smacked back down on Friday with the kahuna. So the VIX, it's considerably off its lows, and if it continues to drop, that will help to push the market higher. Gold and silver are in bearish land, and nothing's changed here. They're not even close to their 50. I would not be fishing long for gold and silver right now, and I'd really like to see them show that they've changed their stripes, and to do that, maybe get above the 17, better to get above the 50, and even better yet to get above the 200. So I'd say teppishly bullish remains the theme, pushed on by seasonality and concerned by a lot of things such as MACD divergences, and we're overdue a correction. If I go down and look at industries, I see there's 145. We filter them with the force index 2-day, exponential moving average, and the highest force comes to the top, and so we can see there's 83 positive force and only 3, I believe, to the downside. To the downside, coal, internet retail, and apparel and luxury goods. So this is a bullish sign here, 83 to 3. Let's take a quick look at some of these. So top-down investors, I want to buy some of the better groups. Who would have thought Intel I can't say I'm too bullish on Intel. I guess I'm inundated with bad news about Intel. But did you see what happened on Friday? Intel had a big gap up. Now, of course, it closed at the lower part of the bar, which could be bearish. It actually had a kahuna the day before as it took out the 50 and the 17. If you want to believe everything is green, it's got a DI crossover. You could play Intel if you wanted to. Micron, what a run this one has had. Lower left, upper right extraordinaire, getting pretty extended away from its 50-day moving average. It's got lots of earnings power left to propel it higher. This has been a leader, and no reason to say it won't continue to be a leader. Broadcom, clearly not a leader, but showing life. The problem with Broadcom is it's well below the 200-day moving average, but 3 pocket pivots in the last week, a kahuna, a DI crossover, turning green here. Is this getting ready to wake up? Maybe. I don't like to bottom fish unless I have a reason. Who would have thought that Texas Instruments looked this good? So clearly, stealthy-wise, there's some great strength in the semiconductors. Here's Texas Instruments, good earnings per share growth coming in above its multiple, pays a small dividend. You might want to be playing there. See what else I like in this. NXPI has been a great performer. Lower left, upper right. Earnings per share may be slowing down. And then if you wanted to roll the dice, Himax, which I guess would not be in there because it was down on Friday, is the manufacturer of a big component of the Google Glass, and also has a ownership stake in it by Google. Chart doesn't look like much, but for a couple days it looked like it was going to break out. So I might take a look at this guy, and if it breaks above this level, certainly if it breaks above the high from back in September, this might be a place to play. It's got earnings coming in next year, and the big story here is if Google Glass succeeds, Himax succeeds, and there's a big investment by Google. Have you seen the floating stores? Regional banks, we've been talking about them for weeks. I can look at them. They're all going to look about the same. The one that I currently own, or one of the ones that I own, the highest ranked one here is Q4. And some of them have earnings, some of them do not. When I look at my buy list, perhaps we'll get a little bit more insight into that. But many of them have pulled back, and they look like they want to run again. Q4 had 2 kahunas last week to the upside, a DI crossover, makes money. And one of the things that I've heard, rising interest rates will help the small banks. So regional banks, and I'm not going to go through them all. There's a long list of them. Might be a place to play. We've been talking about it for many weeks, actually. Communications equipment. Boy, these charts didn't do anything for me, but they have tons of volume. Look at the volume on Cisco, 46 million shares. Force looks at price change times volume. So here's Cisco. I'm not interested. Well below the the moving averages. Huge volume, and it was up a little bit for the day. No, thank you. Of course, that means it's going to start to run up. Juniper Networks, probably one of the gems of this. I had some AFOP for a while. These stocks got hammered, as you could see. Juniper making a nice run up. Scott still has earnings left in the stock, mostly green, a couple of pocket pivots this week. Here is Finisar. Finisar gapped up, got above the 52-week or the 50-day moving average. You can see it above a gap up, but it closed at the low of the day and almost filled the gap by itself. I don't think that's a very bullish-looking pattern. So I'm not a big believer of these stocks. Well, we back up. Who cares if I'm a believer or not? Wasn't that impressed with the charts on these stocks, but I am a believer when you make it to the top 10. Diversified banks. Several of these looked interesting. We'll call George back in a little later. Sorry, George. U.S. Bancorp was a top-ranked one, and you could see pull back to the 17-day moving average, DI crossover. Everything is green in a kahuna. This might be another interesting bank. So there's a theme here, banks. And I haven't looked at the big guys. Wells Fargo pulled back into the 17, kahuna on Friday. So banks continue to look strong, certainly the regionals and the diversified. I think this is where you're going to find your Bank of America and stuff. Biotech. Talk about a big pharma stock, well, not a big, a pharma stock and a biotech stock. Puma Tech Not Bio, yeah, this is funny. I don't know anything about them. I don't know what drugs they have. They're a preclinical company, but they must have had great news last week because look at the big run. So I get nervous of paying $90 a share for a stock that I don't know anything about their product portfolio. So I have to ask myself, was there a time in the last 10 days, 2 weeks, 3 weeks to get interested? And, you know, it's tough to get interested here. You had pulling back the lower Bollinger Band, then you had a series of kahunas, 1, 2, and 3. This was probably when I should have bought into this stock. When you had the 3 kahunas in 5 to 7 days, I've learned that from Ian, is a very positive sign that you had a Bible gap up in here. So there were signals in here, but, you know, I didn't see them. It doesn't make money, and I'd be hard-pressed to go out and buy this now. That said, closed at the high of the day on Friday. There are the big hematology meetings going on this week and the big breast cancer meetings, so it's very likely that they had some positive story told. Gilead. I like playing this one. Everybody knows that. I've been pounding the table on this back, well, at least when it was 60, but probably before then. And Gilead had an approval late in the day, and my guess is that you'll see the stock trade up tomorrow. I talked about it on the web. I don't always go in and say things on the web, but I talked about how they came up with a drug that's supposed to have a lot of value for, not up a nickel there, up 50 cents. That's not a big difference. A blockbuster drug that should own the hepatitis C market in this country, which could be an $8 billion revenue on a new drug in the next 3 to 5 years on an annual basis. It's a huge deal. I expect Gilead to trade higher on that news. I don't think it's all priced in. Celgene, you know, this is another one of my favorite holdings. I'd rather buy it off the 50 than buy it up top. You know, they had some good news themselves last week. Still waiting on an EU approval in Revlimid in first-line myeloma. That'll take the stock to 200. They did come out and increase projections for Revlimid, which is important because the street watches that. Biogen IDEC, boy, was this a great opportunity, and we called it here because you had a kahuna here coming through the 50. And then breaking up above the 50, you had another kahuna. You had multiple opportunities to get into the stock. You know, you want to buy these great stocks when they're basing on 50, which is free parking. Lexion, does it want to run again? Looks like it to me. Pocket pivot, kahuna, everything is green. This is a stock that has really one product. Trades at a huge multiple for a biotech stock. But the exciting thing here is it's an orphan product. They likely will be years, if ever, before they have generic competition. It turns off a horrible disease as long as you take the drug, and people are going to use it no matter what they want to charge, and it's already $380,000 a year per person, and no one really complains. Amgen, you know, is this a good time to buy? Maybe. This acquisition of Onyx, they've got other small compounds. I like some of the others right now better. They've got an older portfolio of supportive care drugs. We'll have some patent issues if the biosimilars ever get sorted out. But certainly a good place to look at it as it's basing on the 50-day moving average. On the big chemistry side, or big pharma side, rather, Auxilium. Now, I made some jokes about it. There is a disease where the male, all right, I'll do a ratings disaster, where the penis has a hard angle, a tough angle related to some scar tissue, and this drug will straighten out the penis. So I guess if you have this, that's a pretty big problem. They got an approval on Friday. It's a couple $100 million market opportunity. The most important thing to me is this is a stock that's going to turn positive on earnings, with some great earnings per share coming into the stock over the next couple of years. You tell me people didn't know what was happening. You had a kahuna on Thursday and Friday going into the approval. I think that this stock has a lot of room to run and the fundamentals to support it. And it's been higher in the past. And to go back up to that $28 or $30 range would not shock me. And I think this is a buy, and it wouldn't shock me to go back to the 2010 $36, $37 range. So I think that this is, like Gilead, a very exciting story, and like Gilead, although probably more risk short-term, a buy. AbbVie has the next hepatitis drug. My challenge with AbbVie is lots of pocket pivots and very couple kahunas, looks great. I have some options in AbbVie. Doesn't have a lot of short-term earnings growth. They also have Humira, which is a RA drug, psoriasis drug, and their Hep C drug is about 2 years behind Gilead's. Big fan of activists, and again, like Gilead, how many times do I have to tell you to buy this thing? It's better to buy it off the 50, so I'm not going to make any comments about that. Pocket pivot here, kahuna, everything turned green, and great earnings per share growth. I like it, continue to like it. I think it will do well going forward. And then Jazz had a bunch of upgrades this week. This has been one of our favorites on this call. Basing here probably runs up to 130 is my guess, which is what the analysts called. So pharma and biotech, why would they do well with healthcare reform? Simple, because more people will have insurance, which means more people can actually pay for drugs. Healthcare equipment, this is interesting. There's a tax on these drugs in Obamacare. Not as exciting as I drop down the list, perhaps, as biochem and pharma, but we'll take a look at the top couple as part of our top-down review. Boston Scientific, sort of living in free parking range, got back up to the 50. Interesting, not that interesting. Intuitive Surgical pulled back hard, it's below the 50. Did have a kahuna after being trashed here. Not interested. Medtronic, you got lower left, upper right, pulled back to the 50 on Thursday. Gapped up on Friday with the DI crossover thing turning green in a kahuna. This will be the one I would find the most attractive, but it's also a much more expensive stock. Packaged foods and meat. You know that the market, something's going on when these guys make it into the top 10 list. Campbell Soup is not a great growth story. However, it's a safety story, and it's probably a dividend story. It pays at 2.9%. Campbell Soup below the 200-day moving average, a couple of pocket pivots, a big kahuna volume coming in. Yep, something's changed there. Not my kind of stock. Mondelez International, don't even know who these guys are. They are food and beverage company, snacks, Philadelphia brand cream cheese and Kraft cheese. Okay. This must be the R.J. Reynolds spinoff. Okay. Or Phillips Morris spinoff, one of those two. Lots of pocket pivots, mostly green. In and up channel, 1.6% dividend. These are, I would think, defensive stocks, and these types of stocks don't normally do well in December. Green Mountain Coffee Roasters had gotten trashed. I actually had a one-day story here. I was at the Vegas meeting, pointed out to people that I bought it on this day and sold it here. Big gap up related to an earnings beat, but nothing really changed in the story that really wants me to go long-term in that. That's a seasonality opportunity that I saw. Automobile manufacturing. So to me, there's a couple of interesting stories here. So GM, I've been a Ford and Tesla fan. Tesla obviously been on the lumps lately, but had a couple of nice moves last week. Here's General Motors or Government Motors. I think the government's getting out of Government Motors. As that happens, the stock may have a nice little move. I think the U.S. auto industry is strengthening. You can see it's got great earnings per share growth coming into the stock. It's in an uptrend. It had a kahuna on Friday. Everything is green. I've talked a lot about Winnebago, but what about Thor? Thor is another RV manufacturer, motorhomes. And Thor, which has been in a downtrend with the weekly Bongo red, the daily turned green, the forces turned green at a DI crossover kahuna. The last 2 days got above the 50. When I start to see double kahunas, I get interesting, and it does have earnings coming into the stock as well. So this is what top-down is all about. You look at what industries are working right now and then what stocks are in there. Asset management, custody banks, more finance stocks. E-Trades and Schwab's were doing well for a while. Probably still are. I'm going to look at many of these. Let's take a look at the first one. One doesn't belong there. Home away is more like a price line than a custody bank. So that's a, I think it's a misnomer. So there's Invesco, earnings per share, running up here, pocket pivot, kahuna, everything's green. Yeah, that looks pretty good. So financial stocks, here's BlackRock, pulling down towards the 200, makes money, pays a dividend of 2.2%. So this looks like a place you might want to take a look at. Don't know much about these. Legg Mason going sideways, pocket pivot and a kahuna on Friday. Great earnings per share coming into the stock, pays a small dividend, multiple 14.5, and growth rates coming 25 to 80. That's one that I might want to go look at. I like earnings per share, as I've talked about before. Airlines, I have a position in Delta, and I've been nibbling a little bit of Southwest. So U.S. Air and American, their merger's been approved, and so they'll be going through the M&A issues. So I probably won't touch them when I think about Northwest Delta and United Continental, the hiccups that they went through. Delta, same exact chart, but lower left, upper right. I think it will run higher, good earnings per share coming into the stock, and similar chart pattern in Southwest. To me, Southwest and Delta were the most interesting. There are a lot of airlines that look similar. I think Delta is going to be a big winner with this U.S. Air and American coming together. Just take a look up here. Other diversified services. So I think these are the big banks. And I have a big position of Bank of America. I say that every week because this group is always near the top. And so, if you're holding a big position in XLF, God bless you, you're probably feeling pretty good because whether you're looking at asset managers, regional banks, diversified banks, the big kahuna banks, they're doing well. And, that's something that you probably need to be playing in as we continue to improve. As I said before, they may do okay in a rising interest rate environment. Refiners are up to 17, integrated oils are 21, steel 35, home builders 34. All right, so we've gone through, we found a number of good looking stocks. As you know, that was bottoms up or tops down. I cheat and do bottoms up too. I have a couple approaches to bottoms up that I promised to show you something that I didn't show you last time. So we'll start with my favorite way is to look at sprinters, and we'll go up to Woodward & Brown, HGSI Strategies, Woodward & Brown, Archive, Reference, Miscellaneous. I have this down below my users, but I'm afraid if I don't go this way, you won't find it and you'll get mad at me. Don't want you getting mad at me. Actually, especially now that I need you to come to my meeting so I don't lose money on it. On the sprinters, there are 65 that made it to the list. Some of them are stocks we've already looked at. Let's real quickly go through the first 10 of the top sprinters. So sprinters come from Dave Ghilardi. They're technically strong, typically have good fundamentals. Here's a portfolio management company. We didn't get to this one. ASPS, lower left, upper right, looks very strong. Here is iGate. Didn't like the earnings per share much on this stock, slowing down, but do love the pattern basing. and then broke out on Friday with a pocket pivot and a kahuna. This made my buy watch list. St. Jude Medical, these medical device stocks. Lower left, upper right, big kahuna. Everything is green. That's one that you might look at. Medtronic was similar. Thermo Fisher Scientific, pull back to the 17, kahuna pocket pivot. That looks very nice as well. So you could go through the sprinters. Mattel, this one made my buy list. It's a small stock. You want to own it, buy it when it's down here, not when it's up here. But looking at its earnings coming in, I almost wonder if that's the base I'm going to get and it's going to want to run again. One to take a look at, certainly getting extended. Nike, one of the few retailers that looks good, pulled back to the 17, wants to run again. So top down versus bottoms up. In a strong market, probably doesn't matter which way I go. In a questionable market, I definitely want to be buying the best groups. So when I take all securities and I start running scans on them, I am not being a top-down investor. Now, here's one of my things that I put together. I said, well, what do I like? I like kahunas and force up. So I want to have a kahuna with positive force. I want to be above $2 in cost and 150,000 shares. I want to be above the 200-day moving average and within 1% of free parking. Free parking is a 50-day moving average. So I want to find stocks that have pulled back to the 50-day moving average and had a kahuna today. So this took my 8,000 stocks down to 42, and then I very quickly will go through this list to see, do they meet my criteria, and do any of them look viable? So, uptrend, it's above the 200, pulled back to the 50, and broke above the 50. Air Products had a kahuna today, DI crossover. Sure, it's an uptrend, pulled back, had a kahuna today. We're sitting right on above the 50-day. I can buy it. If it goes trades above, put my stop below. It's expensive stock, though. Kraft Foods, I don't like this one as much because it's been bouncing off this 200 a lot. So I probably would pass on that, but it is above the 200 with a kahuna. Emerging markets, we'll skip the emerging market ETFs. Avnet, don't know this company, but uptrend, got ugly here, just got above the 50 with a kahuna. Not too interested. Robert Half is the kind of stock I look for. It doesn't look as good here as I thought, but basically, take a look at a weekly. Clearly has been in an uptrend. It stubbed its toes in October, and it's had a pullback. And what I see here is that on Friday, I crossed above the 50 with a kahuna and a DI crossover. The forces changed, so force are both positive, the force kahuna, crossing the 50, so it's on free parking. And then I'm curious if it had a logo breakout. Nope, HLF, I don't see it there. These fire intraday, which is why they're so awesome on my indicator set. All right, so Robert Half, I might look at. Sherwin-Williams was a leader, getting kind of ugly here below the 50, so I'm not too interested there. Dow Chemical, uptrend, sideways. It's below the 50, but it's within 1% of it, had a kahuna. So basically the message there was I've created a number of scans to try and find patterns of stocks that I like to buy. And I will give this out and show you how to create your own at the meeting. So what else do I want to do? I always like to end with a group inclusion filter and then take a look at my specific buy list. So let's just do a very quick group inclusion filter. Tools, group inclusion report. Again, the hypothesis here is I'm going to look at the stocks in the best groups. And the hypothesis is the stocks that are in more of the best groups are probably good stocks. So let's take a look, and we're going to clear. We're going to save this. I got to bring it up higher. look at the top 10. Web, Gem, 12.8. And we're going to go into certain smart groups, and I'm going to take my Morales and Catcher, Bible gap ups, and pocket pivots. I'm going to go after Ian Woodward and Ron Brown, look at best of, best under 15, ERG 240, demand short-term, growth, GS leaders, QEPs, groups and stocks upside, strong EPS growth to strength, turnarounds. I'm going to hit OK. It's going to look at the stocks in each of these different lists, and then it's going to tell me if there are any stocks that made it in multiple lists, and it's going to give me the top 10 of those. So just say sure call. That would be an index. No. Come on. Come on. Here's the stocks, and you can see these are the stocks that made it to the top, and we're going to look at these very quickly. Some of these we've looked at already. Let's look at the top 10. I'm going to go into my designer. I'm going to find Web Gems 12.8. Here's my top 10, and let's quickly look through it and then say good night. So, after this, we've already looked at great stock. Has been a great stock. Alexion looks like it wants to run again. We already looked at it. Ambarella, it's a semiconductor stock. We know that they're strong. I think it had positive earnings. Trade, had a funny day with a big gap up, a tail all the way down to the prior price, closed below where it opened, but still much higher than the prior day. Everything turned green. So a red candle high after a gap up. I might watch to see what this one does. If I remember correctly, they beat earnings. Chicago Bridge and Iron Works is one I've been watching for quite some time. You can see it had a big move up here. We started talking about it. Kahuna's pocket pivots had a nice run. Also was a seasonality play. Cons had great earnings this week. Ran up, went sideways, pocket pivot into Kahuna on Wednesday, big move up Thursdays and Fridays, Bible gap ups 2 days in a row. Generic is the, we've looked at this before. You can see my little flag drawn on it. They make generators, continues to have a nice run. Jazz, we looked at as a leading pharmaceutical company. Lanet is a generic company. Great earnings per share growth. My only caveat here is it's doubled since August, so it's probably getting expensive. Methode Electronics, MEI, had some funny news, and I thought they missed their earnings, and then people changed their mind and had a bottle gap up on Thursday, closed with a doji Friday. According to Bigelow, it'll trade above or below that tomorrow. If it's above it, you can go long. Micron Technology, already pointed it out. And that was our top 10. So what's kind of interesting is we found 10 stocks, of which 1, 2, 3, 4 we picked up on our top-down review just by doing the group inclusion report. Let me just take a quick look at my buys to see if there's anything else I wanted to point out. We looked at Auxilium, Valco, HGSI. We talked about EdgeRaider. Terex is a construction heavy machinery company. Goodyear Tire, I've been in this one for a while, made a lot of money on this guy. And it's a boring old company, but I think it wants to run again. So you'll see your nice lower left going sideways, 2 kahunas. This probably made my scan of sideways above the 200, breaking out with kahunas, turning green. It's got good earnings per share growth. I've liked that for a long time. So you can go back and look at any of these if you want to. These are some of the stocks that I liked. I mentioned Green Mountain Coffee Roasters. Well, why did I buy it? So I was sitting in a meeting, GM's, the day before earnings. And earnings came out 11/20. So let's see if I can go back and look at this on November 18th. So I'm sitting in a meeting on November 18th. I know that they've got earnings coming out. And what did I see? I saw that it was at the lower part of its range. And so I'm buying off of support the day before earnings came into the stock. It was a risky move, but this was a story all about one thing. It was a story about a seasonality where we look at it on better look at it over a bigger period of time, but this is a stock that goes up this quarter. And just to point out another of our favorite seasonality times, which is coming up, Netflix. And look at the seasonality. Do you not want to be in Netflix at the beginning or the middle of January? And if you look at this period of time here, look at the data. In January 21st and February 3rd, 10 years out of 10 it was up with an average return of 20.7%. It's a pretty good time to look at buying Netflix. This is how I use seasonality, is to actually have an opportunity to go back and look at stocks and look for periods of time where they have massive moves. On that note, let me just go back to my personal advertisement. I don't charge for these. I don't sell anything, but I'll be really disappointed if I can't at least break even on my upcoming meeting. Just to review it, February 15th and 16th. I've already arranged to have George Lee fly in. Chris will be flying in. Starting on the 17th or a night on the 16th is the New York Traders Expo. They have a special hotel rate at the Marriott Marquis. We'll feed and water you. We guarantee you're going to learn a lot. It'll be very didactic. We hope to see you. Here's my contact, and I'm going to leave it as I say goodnight, Jeffrey at highgrowthstockdoc.com. You all have a great night, and I hope to see you in February. Talk to you next week, everybody. Thank you.